Welcome back to the Dividend Diplomats channel, everybody. We did it. We did it, everybody. 10,000 subscribers. Thank you. As Lanny said, we cannot thank you guys enough for your support, for helping us cross that milestone. So you know what? On to the next one, Lanny.
On to the next milestone. But before we get into that, subscribe to this channel right here. Support Bert and Lanny so we can keep bringing you dividend investing news, our stock purchases, our stock watch list, what stocks we're buying, as well as dividend investing milestones and results. Because today, Bert, we're really focused on you and your wife, on what you've been able to achieve this year in 2021 on a certain type of an investment.
Exactly, Lanny. As you guys know, we talk about it every time we do a stock purchase video. Every single time.
Every time.
Why? Because we purchase one share each of Johnson & Johnson every single week. We took a page out of Lanny's book where he and his wife...
They took a chapter out of it.
They did. We took two, maybe?
Maybe
because we
three
each have one.
chapters.
4, 5. How many chapters are in this book?
The chapters in my book are endless.
That's probably an accurate statement. But we started buying our share, consistently investing in the market. Lanny picked VYM. Him and his wife are doing 3 shares each of VYM every week.
My wife more expensive too.
Yeah, it is too, and that's why we're here talking about this video as well. We've added that one share of Johnson & Johnson. We didn't take the ETF approach. We wanted to buy a Dividend King that dominates its sector. That is one of the best. And is it on one of our foundation stocks list, Lanny? I believe it is. 5
foundation stocks for your portfolio. And if you haven't watched, we just introed a new dividend stock, a dividend aristocrat to that top 5 foundation stock in our 10,000 celebration video.
We did.
We do have Macho Bert over here.
Yeah, and Hulk Lanny over here.
That's right, brother. So today we're going to focus on Bert and his Johnson & Johnson purchases. Now, Bert, to really kick this off, though, I want to ask, when did you start buying Johnson & Johnson on a weekly basis?
So we started this strategy. Our first purchase was March 15th, so the end of the first quarter. So we're about 5 months in. Yeah.
Wow.
So we wanted to take a look back. We've seen the market just climb and continue to hit record highs since then. So we thought this was as good of a time as ever to do a check-in to see how that's doing, see the price, and then on top of that, run Johnson & Johnson through our stock screener to see if we need to adjust this strategy if Johnson & Johnson has become too overvalued. So that's what we're trying to achieve here in this video.
Bert, the viewers want to know, what's the lowest price you've been able to grab Johnson & Johnson over the course of these 5 months?
Fantastic question. We grabbed it in the 158s too. So that was the valley. Maybe in the 157s. I'll have to check every single purchase.
So 157, 158, Bert. And what is Johnson & Johnson currently trading at here, at the market close on August 20th? Ticker symbol is J&J as well.
They're just below 180 at 179.44.
So we're talking at least maybe a $22 appreciation or a 14% run up in stock price.
Right. But what the beauty of this strategy is that our cost basis is not 179.44. It's not 158 either because we're buying it consistently. We're grabbing one share. We're riding the highs and the lows, the dips, the peaks here every week.
Drinking a beer, not drinking a beer, drinking another beer.
Yeah. We are. So our cost basis in this transaction is, for my wife, hers is 165.64, mine is 165.07 too. So
you just give her the double bird every time when you talk about it?
I do, but she gives me the double birds for 2 other reasons, which we'll share later when we start talking about the stats here.
She gives Bert the old Bert stunner.
Yeah, it doesn't need to be investing. She just gives that to me at least once a day.
Once a day in the morning.
Yep. But in all seriousness, our cost basis, because we were buying when it was in the 158s, the low 160s, and the stock price has just started recently to really start climbing here into the 170s.
That ladder match.
Yeah, it's trailing here. Our cost basis is trailing the current stock price, which I love, and that's why I like this strategy.
Now, Bert, I know a couple weeks ago, about a week and a half ago, you even debated about stopping this purchase. Now, what other stock did you compare this one to at one point?
Well, it's the newest entrance to our top 5 foundation stock list. So if you didn't click the card with the video before, go back to our channel, look back to the previous videos, and see our 10,000 subscriber video because our newest top 5 foundation stock is Pepsi.
Pepsi. Ticker symbol is PEP. Now, Bert, you stacked J&J at one point versus Pepsi recently.
Yep.
And
what we found is if I was concerned about Johnson & Johnson becoming slightly overvalued, I was just happy with their current valuation because I looked at Pepsi. Pepsi is much higher from a PE standpoint. They were above 25, and they're only going to keep climbing as their stock price continues to soar.
Wow. Another question that some of the community may have here is, what COVID-19 vaccine shot did you get?
Pfizer.
You got Pfizer. Sorry, J&J. Wasn't on the list.
Sorry about that. Yeah, no, you didn't have that, but you are seeing the impact of their vaccine and for Pfizer, for Moderna, for everybody else starting to trickle through these financial statements because we are seeing some strong revenue growth, some strong results because of this. So it's been a nice little booster, not for my arm, but for Johnson & Johnson's income statement.
Yeah, not for the colon blow.
No, they don't. That's not one of their brands there, but while we're talking through it, what I like, even though they don't have colon blow in their brand portfolio, they do have some of the best consumer staples, and that's why I picked Johnson & Johnson in here. They have Brett Landy, some Tylenol, some of the other big ones here, Band-Aid, yep, Listerine, Splenda,
Aveeno.
Yeah, big in the baby sector.
All the ladies out there, because our videos, really, that's all the ladies watching our videos.
Yeah, that's not what the analytics are telling us. In fact, it is telling us quite the opposite.
Yeah.
So, but they're all throughout your medicine cabinet. They're all throughout your house. That's why I like Johnson & Johnson. If I'm going to buy a stock consistently for myself and my wife, we're going to pick one of the best brands that will be found in everybody's household that has managed to increase its dividend, earnings, and revenue for decade after decade.
Yeah, J&J, think of them as a nice healthcare, pharmaceutical-ish consumer, healthcare provider as well. Very interesting dynamic. Again, they continue to perform and continue to be the most consistent dividend growth stock, Dividend King for that matter. And Bert, what's another nickname we give J&J?
Old Reliable.
Good old reliable. It's like when you watch or you read the book Old Yeller, this is Old Reliable.
Just like that.
Yeah, except you hopefully it doesn't get put down at the end. Now, J&J.
Yeah, I think myself and a lot of dividend investors out there will be mad if we have Johnson & Johnson getting
unless they get acquired,
SPACs are crazy these days.
So J&J currently is trading at $179, Bert. Now, how many total shares have you and your wife purchased over these 5 months?
I've purchased 30. My wife's purchased 32.
Oof.
Why does she have more? Two reasons. One great, one stupid. 1 week I forgot to purchase Johnson & Johnson in my portfolio, so I was already down one there. But she's also added an extra share or two here and there, and so have I when the market was climbing and we were just looking for other stocks to buy throughout the week. We love Johnson & Johnson on Monday. Their price went down during the week, so we were like, screw it. Let's just grab another share or two of J&J. Yeah. So that's how she ended up with 2 more shares than me.
I've shot you a few texts, too, to be like, dude, J&J dropping.
Yeah, those texts have stopped over the last few months as this price climbed, but there are plenty of weeks where I'd buy them at 163 on Monday and they drop into the 150s by Thursday, so we grabbed up an extra share in those times.
So 32 shares in your wife's account, 30 shares in your account. Is this in your taxable brokerage?
Yes, this is all taxable. Oof. We wanted to build it up in our taxable.
Juicing that up.
Yeah, so in total with our average cost basis on there, my wife, so yeah, she's bought 32 shares at an average cost basis of $165.64. Her total investment's been $5,348. For me, 30 shares, $165.07. My cost basis is just under $5,000 at $4,952.10. So
in total, how much have you guys poured into J&J in 5 months?
All right, everybody.
Grip your chair right here because these numbers, this is where consistently investing, really, you start seeing how much you actually do week in and week out. You earn money, you save it, and you just put it into assets that produce income.
So in total, we've purchased 62 shares. And in total dollar amounts, that has equated to $10,252.58.
Wow, over $10,000 to match up pretty well with our 10,000 subscribers. Subscribe to our channel if you haven't already at this point. Also, give us a thumbs up if you and Bert share the same philosophy on J&J, the Dividend King.
So this position, though, that was the cost basis. We've invested 62 shares and the current price is $179.44. The current market value of this position is $11,125.28.
Wow, Bert, so you've already added almost $900 over your cost basis and an unrealized gain that is producing an overall return on just share price of 8.5%.
Yep, that's exactly right, Lanny. So hey, in 5 months, we'll take it.
Better than your cash sitting at your Ally, Cap One, Goldman Sachs, Marcus, M1 Finance, you name it, where you're getting below, at or below 0.5%.
But for us, we're dividend investors. We don't care just as much about the market value. We care more about the dividend income and the income stream that this is going to produce.
And buying an undervalued dividend stock.
Very fair point as well. With 32 shares, the annual dividend of $4.24, my wife's dividend income has increased $135.68. Mine, 30 shares times 424, $127.20 in total. This has added $262.88 to our forward dividend income.
You know what's crazy is, and when we'll go through the metrics here, dividend growth alone is going to be increasing that income now automatically. And Bert, you reinvest your dividends as well.
Of course, so each quarter at these current levels, we're going to receive just over $65 on a quarterly basis to purchase shares. So that's going to get you, what, a third of a share of Johnson & Johnson in total between the two of us, which will help increase that future dividend going forward. That is dividend reinvestment at its finest.
We'll get into the dividend metrics here really quick with the top 3 dividend stock metrics from the Dividend Diplomat Stock Screener, which is really quick. Price to earnings ratio, payout ratio less than 60%, and dividend growth. Bert, it looks like if everything remained constant, essentially your reinvestment plus the dividend growth would actually add almost $21 to your forward income right now.
That's exactly right, yeah.
Pretty awesome. So Bert, here we are, J&J. You want to run J&J through the dividend stock metrics to see if you still think it's a dividend stock to buy and to see if the viewers also agree. Maybe this is a stock to buy or add to your watch list.
Sure, their stock price. We're going to start with the price to earnings ratio. So we'll divide the price by the earnings as the name suggests. 179.44 is their last closing price. Forward estimated earnings per Yahoo Finance is $9.67. That's a PE ratio of 18.56.
Real solid. So essentially the market currently over current earnings is at 35 times earnings. Forward S&P 500, aka the overall stock market, is trading at about, on forward, about 22 to 25 times earnings. So this is definitely undervalued comparatively.
The second metric, payout ratio. We look for stocks under 60% payout ratio because this measures the safety of the dividend going forward and the company's ability to continue growing that dividend because we are dividend growth investors. What's our perfect payout ratio, Lanny?
In that sweet spot of 40 to 60%.
Let's see where Johnson & Johnson fits. $4.24 annual dividend divided by 9.67. Geez, man, oh man, Lanny. I guess a 43.85% payout ratio fits our perfect payout ratio.
Perfect, baby. J&J, good old reliable, perfect payout ratio. Lastly, let's get into the dividend growth rate. They have increased their dividend for how long, Bert?
For 58 years.
58 plus years, going strong year after year after year, at a 5-year average growth rate of
5.70%.
Money, baby, well above the rate of inflation, crushing it. And then that bonus dividend metric, the dividend yield, Bert.
2.36%, everybody.
Yeah, it's definitely, obviously it's inversely related. Increase in stock price decreases your dividend yield until a dividend growth or an increase happens. J&J's happened way back in April, so we'll have to wait till 2022 for the next increase. But 2.36% on the dividend yield is actually still higher than the S&P 500.
Exactly, Lanny. That shows where the market has gone. So let's see. Am I changing my strategy? Absolutely not.
So you heard it here. He is not changing his strategy. Still a dividend stock to buy for you?
Yeah. When I started the strategy, I said I like Johnson & Johnson because it's consistency. It is never consistently the lowest valued stock. It's never consistently the highest value.
Consistent.
Yeah. Their PE ratio is always between 16 to 18 for some reason. It's always in that range. It's a little higher than that now, but I'm not that concerned about it. The market's expensive. I love this stock. I love that we've put in over $10,000 in Johnson & Johnson, and I want to keep going. It's going to take a heavy price appreciation.
Let's get it to 100,000.
Yeah, 100,000, sure. But there's no reason. We've committed to a year of this strategy to see where it goes, and we'll reevaluate with their metrics where they currently are. Nothing is stopping us from hitting that 1 year mark. So 7 more months to go, unless their price and valuation jumps significantly.
So to recap on the metrics, a PE ratio for J&J at less than 19 forward earnings, a payout ratio that's perfect at under 44%, a dividend growth rate on average that is rounded at 6% with a yield of almost 2.4%. Bert and his wife poured in over $10,000, literally adding over $260 in forward income.
Yeah, again, everybody, Lanny's videos about VYM and his strategy, and even his recent article that he just released about VYM to keep going. This strategy with Johnson & Johnson, hopefully, again, it shows you why consistently investing in great assets, income-producing assets that will see your dividend income grow is our favorite strategy, and why we cannot suggest this enough for all of you.
Let us know in the comments what you think about the strategy, the results that Bert and his wife have up to this point here in the middle of August. Does he keep going? Should he keep going? Let us know. Again, we really wanted to show you the power of dividend investing and staying consistently invested in the market. Any other parting words, Bert?
I think you should send us off, Lanny.
All right, don't forget to give us a thumbs up, subscribe to the channel. This was Bert and Lanny from the Dividend Diplomats.
Over and out.